Hello and welcome to Gold and Silver Assets. So over the past 6 months we've seen a spectacular rise in the gold price, and so that's got a lot of people feeling very positive and bullish about the sector. So is this really what a full throes of the gold bull market really looks like? Well, to answer this, we need to look back at previous gold bull markets. And of course, gold has only been freely traded since 1971. And so we've got less than 50 years worth of data, and that includes 2 big gold bull markets so far. So I put together a list of factors that I think are important when we are in a full-on gold bull market. And so we'll look at each of these factors and look at where we are now. So we'll start with the gold spot price in US dollars on the monthly scale. And so, of course, the first criteria for a bull market would be having higher highs and higher lows in terms of gold price. And of course, just on a macro scale, we can see that we've got that. So we've got higher lows and plenty of higher highs, and we're still awaiting a higher high here. So by that definition, we are in a gold bull market at present. If we look at gold on the weekly scale, so just looking closer up again, even though we had this big drop over here, since then we have had higher highs and again higher lows. So this looks like a gold bull market is in progress. So the next factor to look at is the gold to S&P 500 ratio. So if we look at this chart, what we're looking for is that when this chart slopes upwards, that means gold is outperforming the S&P 500, whereas when it's going downwards, the S&P 500 is outperforming gold. So during a gold bull market, gold outperforms the S&P. So where are we now? Well, at the moment, it's still pretty tame. We seem to have possibly turned a corner here because we are getting higher lows, but we're still not really getting any higher highs yet. So we'd need to see price kind of break out of this little range and move upwards. So at the moment, this is telling us that we're not in the full throes of a bull market yet, but we might well be in the early stages. Another factor is central bank buying, and if we look at recently, during the bear market in gold, we've actually had a lot of gold buying, and this might represent accumulation by the central banks while prices have remained low. And it's foreseen that that's going to only increase further with record demand. So another factor is gold price in other currencies. So when we're in the full throes of a bull market, then gold price should be uniformly strong across all currencies, including the US dollar. This chart shows the dollar index. So the dollar index is basically the US dollar compared to a basket of other currencies, and so those currencies include predominantly the euro, but also in smaller amounts we've got the Japanese yen and British pound. And what I've done here is chart the price of gold in those other currencies compared to gold in US dollars, which is this orange line here. And you can see here that during the full-on bull market, the price of gold was going up strongly in all of the currencies, including the US dollar. But since about 2016, you can see that a divergence has developed here, where there's the US dollar hasn't risen in terms of the gold price compared to the gold price in other currencies. And so we've got this big gap here. And we know that the gold price has actually reached all-time highs in over 70 currencies, yet in US dollars it's yet to reach its all-time high, let alone surpass it. And so by this definition, we are not yet in a gold bull market. So another factor is the gold-silver ratio. So during a full-on gold bull market, we should see silver outperforming gold. And so therefore we would see a drop in the gold to silver ratio. So again here, when gold was storming ahead, silver was increasing even more, and so we saw a massive drop there in the gold to silver ratio. At the moment, silver seems to be matching gold. We've got this kind of sideways movement here, and the gold to silver ratio is still very high in the mid-80s at the moment. And so we have yet to see that transition to the drop in the gold to silver ratio. So again, that makes me think we're not yet in the gold bull market. Another factor to look for is the gold mining stocks. And usually what we'd expect to see is that the miners would outperform gold during a gold bull, and so this would occur first in the majors, then this would be followed by the juniors, and then finally the explorers. So this is a chart of the HUI index, which is an index of the major unhedged gold producers. And this chart is basically representing a ratio of the HUI to gold. So again, when we see an upwards move, that suggests that the miners are outperforming gold, whereas a downwards move suggests gold is outperforming the miners. And you can see here that for years and years, the miners have been underperforming quite badly. And it's only recently that we've seen a breakout from this downtrend. But with this recent substantial increase in the price of gold, we haven't seen particularly spectacular outperformance of the miners, certainly not compared to what we saw back in 2016, which was actually a smaller increase in the gold price compared to what we're seeing now. So again, this is telling me that we're still not in an established bull market yet, and miners may well go down to touch this line before steaming up ahead. And finally, we also want to see retail involvement, particularly in the physical markets. So this chart actually shows the Perth Mint data of gold and silver bullion sales. And we've seen a big surge in physical bullion sales. And in December of 2019, they sold around 79,000 of the 1 ounce Perth Mint kangaroos. Now, by comparison, if we look at the US Mint, in December 2019, they only sold 2,000 1 ounce gold eagles. And in fact, the US Mint has said that in 2019, their gold coin sales were the weakest on record. And the same is true for silver coin sales as well. You can see this downwards trend. And so basically retail buyers in the physical market just aren't there yet, and we really need to see that if we're going to be in a full-on bull market. So of these criteria, it looks like only 2 of them are satisfied at present. However, it's important to remember that these criteria only apply when we're in the full throes of a bull market, and so they don't necessarily represent early signs, and so they're not leading indicators as such. However, my view is that I think we are in the early stages of a bull market, and certainly there are lots and lots of fundamental reasons that support that thesis, and these are discussed very well in a lot of other channels. But what I'm saying is that in bull markets, they don't go up in a straight line, and we will get pullbacks and corrections. But also the aim of this video is to let you know that if you think that the recent price rises in gold have been good, well, you ain't seen nothing yet. I think we've got a lot more fireworks to come in the future. Thanks for listening, and don't forget to like and subscribe. Bye.